I'm Krishna. Today I'll be discussing about McDonald's Corporation's financial analysis. This presentation explores its recent financial performance using balance sheet, income statement, and ratio analysis. We'll also discuss about the key trends and drivers for the last 2 years. In this presentation, I'll first discuss about McDonald's company history, its horizontal and vertical analysis of balance sheet and income statements. Later, I'll discuss about the financial trend analysis with key 6 ratios. Further, I'll end the presentation with management discussion and analysis with key recommendations to investors. Let's get started. McDonald's started in 1940 with its headquarters in California, United States of America. McDonald's is a global leader in the fast food industry, serving many customers globally. This fast food restaurant chain has opened its first international presence in Canada and later became digital in 1996. Today, it introduces various other innovations and have some key growth initiatives like partnering with Google Cloud technology to embed generative AI solutions into their restaurants worldwide. And it is aiming for 30% of delivery orders to originate from the mobile app by the end of 2027. And it also has some other menu enhancement, loyalty programs aimed to customer satisfaction. Let us now see the horizontal analysis of balance sheet statement. Here I have calculated the horizontal analysis on the balance sheet statement. You can observe that here I have verified if the total assets are summing with the total liabilities and equity and how each line of item has changed over time. These trends and growth patterns offers insights into company's performance, and the objective is to identify significant shifts in the company's financial structure and assess its impact on overall financial health. The key changes from the balance sheet analysis would be the current assets increased by 42.2%, indicating growth in liquid assets. And the current liabilities increased by 80.4%, and the cash equivalents by 72.2%, and shareholders' equity by 21.6% in comparison to the previous year. The horizontal analysis of income statement shows us about how McDonald's revenue, expenses, and other activities were. For instance, here I have verified whether the operating income is calculated as a total revenue minus total operating costs and expenses. This analysis helps us to track the changes in each line item over time, highlighting the increase or decrease in amounts. The key changes would be total revenue increased by 10% in comparison to 2022. Also in 2023, the net income improved by 31.7%. The operating income also increased by 24.3% in comparison to the previous year. The vertical analysis, also known as component percentage analysis, shows us the proportion of individual components such as revenue, assets, and liabilities as a percentage of base figure. In this balance sheet, we have taken the total assets as a base figure and calculated these component percentages. This type of vertical analysis helps us to identify the relative importance of each component and its contribution to overall financial performance. Some of the key changes you can observe here: the current assets increased by 14.2% in comparison to the previous year. The liabilities also increased by 7.5%. And there are other equity and property metrics. As mentioned above, the vertical analysis of income statement in this case is about calculating component percentages, however, with the base figure as total revenue. In the balance sheet, we have taken the base figure as total asset, whereas here we are calculating these component percentages with total revenue. And you can see here the total revenue has seen a significant increase in 2023 in comparison to 2022 by 10%. The operating costs reflected a slight increase in comparison to the 2022, and the expense costs for various categories like food and paper, payroll, occupancy, and depreciation you can identify here. Now let's focus on the 6 key financial ratios. Return on equity measures a company's ability to generate profit relative to its stakeholders' equity. A negative return on equity, as you can see here, indicates that liabilities exceed McDonald's assets, which is not a financially good position. However, the earnings per share for McDonald's have increased, and it is a favorable situation for investors. Total asset turnover ratio reflects how company uses its assets to generate sales. While a ratio of 0.44 is better, as it has improved from 2022, it still reflects inefficiency and suggests that McDonald's is not efficiently using its assets to generate sales. The current ratio assesses company's ability to meet its short-term obligations using its short-term assets. The current ratio above 1 indicates it can cover its short-term liabilities. However, the ratio has decreased from 2022, indicating a slight decline in liquidity. Debt to equity ratio measures a company's financial leverage and risk. The negative ratio of minus 7.66 indicates relatively a concerning financial risk. The price by earnings ratio evaluates company's valuation and market performance. It indicates how much investors are willing to pay per dollar of earnings. While a ratio of above 50 suggests that stock might be overvalued, it has decreased from 2022, which could indicate a better valuation or growth potential. Now let's discuss about the management discussion and analysis report. When we see the revenue in 2023 has increased by 9.96%, which is a good growth driven by strong global sales. The earnings per share EPS has increased by 38.76%, which is a good increase, suggesting strong financial performance, revenue growth, and cost management. Some of the key strategic initiatives of McDonald's for the future outlook would be something focusing on global expansion and heavily investing in the digital platforms. Also, keep continuing with its menu innovations, and finally focusing on enhancing the customer satisfaction and dining experience. My conclusion and recommendation would be whether to buy the McDonald's stock or not to investors is that it would be a moderate buy. If you are a risk-tolerant investor with confidence in the McDonald's strategic investments we discussed just now, you can consider buying the stock. However, considering the negative ROE and debt to equity ratio and the decrease in current ratio, although the EPS is increasing with a reasonable P by E ratio, you might give a second thought and wait till the debt and equity situation improve. So these are the references I have utilized to create this presentation. Most of the statements are taken from US Securities and Exchange Commission. And thank you for the time. I hope you learned something today from this analysis. Thank you.